The CalHFA, California Dream for All Shed Appreciation Loan, where California gives you 20% down to buy your home as a first-time home buyer. Is this too good to be true? Sonny here with Neo Home Loans, home loan lender. We're going to be going directly from the CalHFA website, what the borrower requirements look like, what kind of property can you buy, how does this program function, the home owner education courses that are required, and at the end of the day, if this is the right program for you and you do want to take advantage of it, we're going to show you what the next steps look like. Now, I do want to say that California has only allocated a certain amount of funds for this particular loan program. It's about 300 million. And when we did the math, it was about anywhere from 2,500 to 3,000 families are going to be able to benefit from this specific loan program. Last year, CalHFA had a similar loan program that released April of 2022, and they completely run out of funds by November of 2022 that same year. So if this is the program for you, you definitely want to hop on it sooner rather than later. Let's go right into it. So looking at the program eligibility, borrower requirements, you have to be a first-time home buyer. And the specific definition of a first-time home buyer is you cannot have any interest in a property, principal residence, for the past 3 years. Okay. Next thing is you have to occupy this property as your primary residence. There are no occupants or co-borrowers, so you cannot have a co-signer with you on the loan application. Okay. And then you also have to complete 2 home buyer education courses, and I'll show you the links and I'll put that in the description below for you to access. And kind of the best practices to approach that, because like I said, these funds are limited. They are eventually going to run out. And so before making any financial commitments, I can show you a way where you can move through the process and just kind of get that started before financially committing to the process. Okay. So last thing is you have to meet the CalHFA income limits in order for you to be eligible for this program. And it's broken down by county. And I have it here. Let me share my screen or this other tab. So looking at this tab here, for Orange County, you can't make more than $235,000 a year. Riverside, 173. San Diego, my people, $211,000 a year. And then you have Los Angeles at $180,000 a year. So going back to their website, if you don't make more than that income for that county, you are eligible for this program. If you make more than that, you are not eligible for this program. What kind of properties can be bought with this program? You can do single family homes, 1-unit residences. It does include planned unit developments. You can buy permitted manufactured housing. So there's specific criteria for manufactured housing, and you can buy condominiums that are approved or can be approved by the conventional guidelines. Okay. So pretty much fair game, especially here in California for all properties. Now, how does the program actually function? Now, what we're going to get into is we're going to get into the 80% AMI example here. So let me share my tab. And I think this is a great illustration brought up by CalHFA. So if you make more than 80% of the area median income in your county, you are partnering up with California and promising them 20% share of the equity gained over time, right? And for that specific example is if you buy a home worth $500,000, California is going to give you $100,000 towards your down payment that you don't have to pay on a monthly basis, okay? And your first mortgage is going to be worth $400,000. So that's what your monthly payment is going to be based off of, okay? And 5 years later, if that home is worth $500,000, now is worth $640,000 5 years later, you have now accumulated $140,000 in appreciation. Now, if you sell, that is a triggering event where California is going to call that $100,000 due that they owe, that you owe them, that they lent you, and then they're going to call their share of the equity. So that $140,000 increase in equity, right, comes out to $28,000 going to California, and then you keep $112,000 after the sale, right? Now, some equity is better than no equity. And probably one of the main arguments that I've gone through or got in touch with was, well, I'm not maximizing my wealth. That's not what this program is here to do. This program is here to make homeownership affordable and pretty much set that next or that first stepping stone for you to get into real estate, especially here in California, because real estate is expensive. So I think this is a great illustration. So this has to do with if you make above 80% of the area median income, you owe California 20% eventually, and it has to do with the triggering events. The triggering events are in the sale of a home, the refinance of a home. If you transfer the title of the property, that's when California can call their original loan due and their share of the equity. Okay. Now going back to this tab here, example number 2 has to do with if you make less than the 80% area median income. And so what happens there is your share, or California's share of the equity, is only 15%. Okay. Now the interest rates. So just because you qualify for the loan doesn't mean you can reserve those funds right away. Us as lenders, we can only reserve those funds once you are in contract. So once you have a sales contract. So just because you qualify doesn't mean you're going to automatically get those funds. It is very important that once you qualify that you actively shop in the next 30 or 60 days, because we don't know how long that this program is going to last. Okay. So once you get a sales contract, we are going to go into the CalHFA website. They have control over the interest rates. We don't have any control over the interest rates. So whatever they offer that day, we're going to be able to lock that interest rate so it doesn't, fluctuate with the market, and reserve your funds once you have a sales contract. Okay. So the home buyer education courses, you're going to have to complete 2 home buyer education courses. One is an online course, which I would highly suggest. It costs $100, takes 8 hours to complete. And then you have the in-person or virtual, which I heard there's some delay there. So if you want to get it done right away, I would definitely suggest the online. And then CalHFA has layered on the California CalHFA Dream for All education course here, which I'm going to open that up right away. And I would highly suggest that you take this course because, number 1, it's free. And number 2, it takes 30 minutes. At the end of the day, if you're going to take advantage of the program, you're going to have to show the certificate of completion for this particular course. And I found this to be extremely helpful because it goes into extreme detail of how this program works and the different scenarios that you can consider down the road when your home appreciates in value, and how that's going to affect you and your relationship with California and what you have to pay off. So I would highly recommend taking this course either way, regardless of what lender you choose. What I would also suggest, now, this is just a suggestion. If you want to get this course out right away, before spending the $100, right, wait until you actually get into contract, right? Getting qualified and getting into contract for a home are 2 different things. So once you get into contract, invest that $100 into the home buyer education, knock it out in 8 hours. And so now you have the 2 courses that are required for you to close with this program. Last but not least, next steps. If you like what you hear today, I would highly recommend speaking with a lender like myself. And so what I'm going to drop down in the description below is a Calendly link to book your appointment with me so that we can talk more about your goals and your values when it comes to home ownership and real estate. And we can see if the California Dream for All, number 1, if you can qualify, but number 2, if it aligns with you in long term. So in a nutshell, in a brief overview, that's the California CalHFA Dream for All Shed Appreciation Loan Program. I think it's a game changer, and it's going to be interesting this spring, summer home buying season. All right, we'll chat soon. Take care. Once again, Sonny Alquizar here, Neo Home Loans, home loan lender located in San Diego.